TGIF Warriors wrapping up an historic week. Hope everyone is at the very minimum okay, and hopefully you were able to pull something out of this. Um, Hiya, Blake, Mike, Bran. Yes, they quake. And I do want to talk about something. AJ, how are you? James, how you, Ryan, Glenn? When silver was going up, one of my followers, I wasn't long, and he was very giddy. Hi, Marcus, and said, "Well, maybe I could talk you into joining me on this trade." And I could tell because I've seen it in myself, and you've probably seen it in yourself, that when you're right about a market and you have a big move, you feel elated. Okay. And then when you have a trade that doesn't work, you go fetal. Okay. Really, what you want to do is get to where every trade is just another trade. Okay.
Business transactional.
There you go. Instead of doing cartwheels when you're right and, you know, um, feeling sick to your stomach. Okay. So therefore, I end up buying in a clear. Okay. Well, then maybe you need to write things down, Thorindo, and maybe the first column should be what's the trend? Have a column for what the trend is. And you're only a seller of strength in a downtrend and a buyer of weakness in an uptrend. So, journaling and writing things down, especially early on, there's something called, Blake, do you know what it's called? When you write it down, it
Oh,
has
it's a
more.
post-it note. Just,
Oh yeah, I use those too.
just kidding.
Neural something. Anyway, when you write it down, it leaves a deeper impression on
Yeah.
you than
That's
if you
why I have
just
post-it
think
notes
it.
everywhere.
Okay. All right.
Literally.
So, all right. Anyway, let's get to the markets. I hope that helps. Uh, you know, we do have coaches here at ForexAnalytix. And it's worth investing in yourself instead of making donations to Mr. Market, to have someone work with you and change your paradigm, okay, before you're broke. So check it out. Check out our coaches here. You have yeah, there you go. Ryan's posting it. All right. So let's get to the markets. So my best trade of the week was recommitting on after the election in the yen on the short side. And then Steve, gave this is Steve's uptrend line, and here we are. We're threatening it right now. So could it hold? Yeah, it could hold. And I would also say that, this also could be a sign that the market short term might be running out of juice. But anyway, let's just stay with yen, no correlations. We break this, it opens 148, 149. Okay, it's already kind of a false breakdown here. Then this is why I did it, because the new high was under 70 compared to the Dixie had the spiky action over 70. And, I still think this is a possible top here for a move back to 103, but we need to take out 104.20 for that to happen. Looks like a little bear flag might be forming here. But I have more confidence about uh, the yen going down than the dollar, even though I think both of them can. You might have one more conviction on something. I think the yen completed a big pattern up here. So um, that should bode well for yields for a little while anyway. And if you caught Katie, even if we get a bond rally, it's not going to be a lot. And the 10-year, a lot of people changing their forecasts on rates because of the persistence of this move. So when we were in here, I thought, we could pull back to 390. I still think we could, pull back a shade under 4%. But then I think we're going to have another one of these from here. And this was a pretty big move, it was 90 bips. So that's going to take you back towards 5% on the next rally after this break, if that plays out. I think that's when equities come under a lot of pressure. They should get a relief, even though they're parabolic now. Weaker dollar, lower rates. I don't know if that's any, there should be a tailwind, even though they don't even need one. So I do want to show you this, and that's why I bring guests on. If you recall Melody Wright talking about, Airbnb being a broken model. So I did start stalking it. Check out this action. They had earnings yesterday. Oh, hold on. Airbnb. Here it is. Look at that. So, I mean, this is where I, wanted to sell it at 150, but it happened after an earnings report. I'm hoping the market carries forward so I have a chance to sell a rip up at 150. But it's not going to look good. Here's a daily. Because on the dailies, we don't show the aftermarket action, but it's coming in down here after trapping people buying a breakout here. So, ugly action in Airbnb. So sell your vacation rental if you own any, and if you could. So let's get to the crew. And Ryan, how you doing today, buddy? Does it
Good
feel like
morning, Dale.
Saturday to you? I mean, it should be Saturday.
I wish it was. I'll be in the
uh,
pub by now.
so the euro had the weakest rally of the group, and given some back, you have a feel for anything to do there. Aussie was the leader with cable. I mean, they sure seem to be able to give it back in a hurry, don't they?
Yeah, I mean we've got a lot of very similar patterns at the moment.
Yeah,
We've had big candles over the election and then the
yeah.
reversal, and now we're give or take we're
Reversing
pretty
again.
much well
Yeah,
we're pretty much bang in the middle. I mean, if you go,
yeah,
I've used this example in several pairs this morning in the room and the flow show. If you go and something like euro dollar on an hourly chart, or even there, dollar CAD, whatever one you want to look at. So
yeah,
you had the big
yeah,
election down move. You've had a pretty
yeah,
much a 50% retrace, and then
yeah,
we're in the middle. It's that what do we do now moment where the market is just in balance.
yeah.
It now needs something else
A
to make
catalyst.
it move. Yeah,
Yeah.
another catalyst.
What do
And
we have? What do we have to look forward to next week?
I don't know. I'm just trying to get through this
Not
week,
ready.
mate.
Okay. All right. Okay. That's fine. Um, so the rally in the metals, which was huge when the dollar came off,
Yeah,
giving some of it back.
same thing. Look at that pattern. Big
Yeah,
move down, bounce
yeah,
up. Now we're in the middle.
yeah. Same everywhere.
Yeah,
Copper had I mean, look at the volatility we've had in copper and everything. We've had, the unwind of the Trump trade, the Trump trade back on. But you know what's really fun? Really, this is really funny, don't you think? That, we're we're at new lows for the break after the victory. What do you think? Huh?
yeah. Well,
I
they're
mean,
doing much.
he's the president, but there were sure some people shorting the stock up here.
Yeah, I don't know
Um,
what happens with him and and his business interests, doesn't he have to palm them off while he's president? Isn't that what happened last time? He had to, resign from a lot of positions and give it up.
Yeah, he signed it over to his son.
Yeah. So that might be one of the reasons why, if he's not going to be doing a lot in his own company because he's too busy being president, then that might be the reason.
Or how about this? That they've done $1 million in revenue this last quarter, I think.
Oh yeah,
maybe that's a reason, right?
Yeah, you're right. That's
maybe,
it's not
maybe the company doesn't actually make money.
Maybe Elon will buy it and
and I think the idea is that it'll fold into Twitter somehow or merge or who knows. But
anyway,
I think there's a lot of skepticism. Although what actually is the death nail for this particular company and True Social is Ryan joined.
Yeah, joined True Social.
Yeah,
Ryan is the very last person to join. It's over. Just kidding.
I can join to make it official.
But Ryan did have a good idea. I mean, Ryan, you should. I mean, explain to people why you joined. I mean, I think it's smart.
Well, we know what it was like 4 years ago. Some traders here may not remember back then. He was all his policy and everything went out on Twitter. So you've got to be following it. And now we've got Truth Social. I had a look the other day when I joined it to see whether he puts posts out on that before Twitter. It wasn't conclusive. But if you're trading and he's going to be doing the same thing again, you're going to get it on Twitter first or Truth Social first before it hits the main wires, and that's a huge advantage. A lot of the stuff headlines we get come on Bloomberg and Reuters. Not many people have access to it in the retail world, so you get it a minute, 2 minutes after everyone else has traded it. If it comes out on Twitter, you've got just as much chance as everyone else of seeing it first and reacting.
The housing stocks look lousy too. All right, so they should, if we get a relief in yields for a little while, if they can't rally, they could be pretty nice candidates. I think Melody's going to be right. Anyway, what?
I was just going to say, I mean, these higher rates is really, I mean, as you're pointing out, is really, really it's going to be really tough for these home builders and the whole industry, the housing, and I think it's going to be pretty problematic. So,
well, she's saying inventory. Okay, so and that they've overbuilt. So anyway, I'm watching this and Airbnb. So
you're ready to short.
You haven't heard anyone really talking about a housing crash. They did that while the Fed was raising rates, and it never happened. And now no one really talks about it anymore.
I think what the biggest risk is in housing is just that if the jobs market does eventually slow down, you're going to see Airbnbs flood the market and second homes. But I really, really struggle to believe that the housing market's going to take too big of a hit just because Airbnbs and second homes don't make up a huge, I think I heard like maybe 10% of the market. You're going to get a little bit more inventory as a result. And, most people are just stuck. I mean, that's the fact is, as an example, my mortgage is at 2.5%. I mean, it is literally almost at the bottom. I've met one person that had a lower mortgage than me. And, I did it like a trader. I'm like, there's no way, and I refinanced but now I'm stuck. Like I can't sell this house, not my primary residence because unless I've got to move, I mean, there's no reason. And there's so many people are stuck in that situation. So,
yeah.
Anyway, but hey, Dale, we've got Canadian data coming up. Do you mind if I take over the charts?
No.
I heard Steve.
I always look forward to you taking over the charts.
So you can this is a total joke. I was going to say so Dale can go look at porn, and that was totally joking.
Yeah.
But did you see all of these? I I said something about, North Korean troops are starting to see yesterday
Action?
they're starting to see some losses, some
Oh,
troops getting wounded. And then a couple people sent me over articles about, the problem with the North Korean troops is now they have internet and they're hooked on porn. So
oh, okay.
and they're
So,
on the front lines in
yeah,
Ukraine, like looking at porn.
yeah.
And
Wow.
I'm like,
Yeah.
that's the funniest thing I've ever heard in my life.
That
But it's
well,
probably pretty
that's
serious.
the way they want to go out.
Yeah,
So,
right.
anyway,
Okay, okay.
that's pretty good.
All
That
right.
like,
Enough talking about Steve. Just
oh
kidding,
yeah,
Steve.
oh yeah.
Steve, just heard your voice. How you doing,
Go
Steve?
ahead. Yeah.
What are you making out of this the post Trump election, Trump trades unwinding, rewinding? I mean, what are you making of all this mess that you're seeing?
As I was saying yesterday, I don't consider what we saw yesterday unwinding. I mean, yes, we retraced part of what happened, but I mean, on the other hand, it was a normal reaction to very big day, right, of movement. So, as I was saying to our members yesterday on the Morning Edge, I didn't think that one day of counter trend price action was enough to think that the deal is sealed and now everything is going to be moving in the opposite direction. As I don't think that it's conclusive that we're also 100% moving in that direction. But I do think that if we have to err, we have to err in the side of believing that there is going to be some follow through post elections. The Fed tried not to move the needle too much yesterday because obviously everybody was. One of the reasons, in my opinion, that yesterday we got a counter trend price action is because people started focusing again. The elections was over, so what is there to focus after that? Monetary policy, of course, right? Um, so now that the Fed is out of the way as well, without creating too much of a movement, in my opinion, there is a very good chance that we're going to continue where we left it post-election. I don't think in the pace that we saw on that day, obviously. But I think that if we have to err in one side, it's going to be that that's what we're going to be seeing in the days and weeks ahead.
Yeah, and really we have to take a step back and think about, what's going to happen over the next couple of months, and really we're not going to know anything until January. So
Yes,
January is going to be, where the rubber meets the road, and we're going to realize, I think the market's coming to that conclusion that, tariffs is a negotiating tool. It's not necessarily
of course.
it's not going to be an end all be all across the board. He's just, this is a negotiation tactic, so let's not get too carried away on what may happen. We were just talking actually in the chat room. If you guys aren't in the ForexAnalytix chat room, I was chatting with Mark here about copper and copper prices as they're consolidating. We were just discussing about exactly that about 45 minutes ago. And so if you want to have like some deeper conversations with us regarding the markets, jump in the chat room, because not only are we posting stuff all day long and charts and setups and everything else, but we have side conversations inside of the chat room on different threads. So make sure this is probably one of the most active places to be in the community. Matter of fact, I want to also talk about something that happened last night. Thank you, Steve, for your input there. If you guys haven't been watching, these yen pairs are starting to roll over a little bit, and I want to just highlight like the
USD
euro
yen, by
yen.
the way, was my chart of the day because I
What?
agree with you, Blake. There is a danger there.
Yeah, the dollar yen, yes, and that was Steve's chart of the day, which we just tweeted it, and you can find it on our blog. But take a look at just some of them here. Here's the euro yen. We broke this ascending channel. We are obviously at channels or at support here. Sterling yen starting to roll over from the channel. Aussie yen, little false breakout. Now, if you guys didn't catch the head and shoulder last night, here, let's go over to ForexAnalytix. update timeline last night. Let's see, last night about 11 hours ago. Here's your setup, and here's what it looked like this morning. So, you got notified on via your mobile app and last night about 11 hours ago on the head and shoulder pattern in the ASEAN, but it created a false breakout of this range that we've been in. That's significant. Kiwi yen struggling at the 200 DMA and the range once again, and Canadian yen. Now we have Canadian jobs report coming up here very shortly, but you can see how we're rejecting that resistance and the 200 DMA channel resistance, 38 or 50% retracement. So a lot of these yen pairs look a little weaker today, and it's something that, when you're thinking about risk appetite, if there is some
If
selling
the
of
yen
risk,
breaks down, that would be kind of risk averse
yeah,
aversion
or the
coming
yen
in.
starts to gain some strength, or yen
Well,
pair.
that's what I mean. Yeah.
Yeah, exactly that. I know there are some currency pair illiterate people here, so there's sometimes you got to make it be a
Me,
little bit more specific.
I'm
Yeah,
one.
yen strength or yen pairs breaking down. That's just something that we should be watching, just because remember, we've seen a lot of these Trump trades unwind, but there's a lot of them that are still in play. Like obviously, Bitcoin is still holding up really well.
Yeah.
It actually tested the breakout point yesterday and bounced aggressively off of the 74,000 level. You can see how yesterday we basically dropped right to 74.5 and then ripped right back up. So Bitcoin's still holding up, but the dollar's, getting a little wobbly. And then, stocks are obviously still holding up too. But again, if you start to see, some of these reversals here, you gotta be paying attention. Now we have, this is something I wanted to talk about, and Ryan, I'm sure well, I was listening to the Flow Show and I was just getting to this part of it where I stopped listening to it because I ran out of time before this show. I'm sure you talked a little bit about the Canadian jobs report, but before we discuss this, I'm going to point out some specifics regarding the dollar CAD. Dale, we've had an immense conversation over the last several months. The last time we were up here and we rejected in August. I said, don't fall for it. The hedge fund community was way too lopsided. The fast money traders were expecting a move to 140. I definitely expect us to break it at some point, but they were too lopsided up here, and they were too short Canadian dollars. Wasn't going to happen, and they unwound. And when we broke this support, it just stopped them all out. You saw it in the CFTC positioning data that leveled off. As we were down here. Now we've seen this breakout higher. And as this has been moving, I've said the last several weeks, I eventually expect the dollar Canadian to break 140. I do. I think we break 140. And Ryan, you've been talking a lot about recently that we might, see the mid 140s. I believe that as well. Here's something that's really specific, though. This is the daily chart. This is, the run up into the Trump trade, as you all know, and yields. The pullback has only been 24%. That's a very, very shallow retracement. That means that if you're short, it's not giving you a chance to get out. Here's something specific. If you look at my FX book, this is a bunch of live trades in retail, right? It's a good barometer. You'll notice the dollar Canadian right here is active traders or retail traders are short. 93% of them are short Canadian dollar CAD. Only 7% are long. Do you know how big that number was 2 days ago? Ryan, do you know?
No.
Okay. For the election, during the election, that was 95% short. So we had a correction in the dollar Canadian of approximately, let's see, what is that? 139.50 to 138.40. That was a 100 pip drop in the dollar Canadian. And 2% of the shorts covered. So here we are ahead of a
Plenty of
jobs
fuel.
report. Now, I'm not saying that the jobs report is expected to come in a little weaker than expected, But if it comes in a lot weaker than expected, we could definitely be sitting up here at 139.50, if not breaking higher than that. So those are my thoughts about the dollar CAD. It's a position, it's a retail nightmare, and it's good if you're thinking about it from a trading point of view, and more of a take advantage of the retail market point of view, especially if this Canadian data is weak. But Ryan, do you have any thoughts in the Canadian data as we approach it this morning?
Yeah, I'm gonna look to trade a strong number. If we get a nice strong jobs report and we get a decent dip in dollar CAD,
Want to trade it short?
No, I'm going to buy it on the dip.
Oh, okay. So if we see a strong
CAD
Canadian
strengthens,
jobs
yeah.
data, you want to see a little dip, and you're going to try to get long somewhere down here.
Yeah, preferably near that bigger low, the election bounce low down near 138. Yeah, that there would be
Got
nice
it. That
and
makes
juicy.
sense. That makes sense. Okay. I mean, the market is looking for, the Canadian jobs data to weaken a little bit. I don't have a big enough feel for it. But the market is expecting unemployment to tick up 0.1%, and I think to create 30,000 jobs, yeah, it's 28,000 jobs coming off of a decent number. So the market is looking for a little bit of weakness here. So we'll see if we get it. Very good. Dale, do you have any? I see Mish, and good morning, Mish. Good to see you. Mish is a great person to have here. Not only a technician, a good technician, but also a good macro guru. So make sure you all stick around after the Canadian jobs report. But Dale, do you have any thoughts as we head into Friday here? The markets in general, doesn't have to be the Canadian.
Yeah, I think what you were talking about with yen crosses and the yen on the verge of turning down, that if we get to say 60.50, 6,100 in the S&Ps, I'll be trying it. And I think that you're right. We could have one more shot up in Canada. I don't think it's going to be a breakdown. I think it's 3 drives to a top. So I'll be looking to short it up around where a lot of people think might be a breakout. It shows up on is that a 4-hour?
That is a 4-hour.
That's good. Okay. So the second high did not take out the first high, did it? Yeah,
No,
it
it
did.
didn't.
Okay. So it wouldn't be a third drive.
Okay.
All right, I
But
still think I'm still leaning towards there's a possibility of a $103 before I want to get long dollars.
okay. All right. Well, we'll see what happens here. And I played like the Euro Canadian on the on election night too for about 70 pips too, because I think the Canadian dollar just looks weak, and you can see the Euro Canadians holding support. So I played it long off of that. But and obviously if you're in the ForexAnalytix chat room, you saw those trades as well. But I just think the Canadian dollar actually looks weak to a lot of different currencies. It's not just the dollar. This is not just a dollar trade. And for those of you that live in Canada,
it could be risk off. It could be risk off.
It could be. It definitely has a correlation with VIX. Hey, real quick, Steve, do you have any final thoughts before we head into the weekend, buddy?
Last word, Steve.
Then what?
Your final thoughts.
I was hoping that we're going to have some kind of a resolution by today in some of the markets that I'm tracking, but it seems that we will probably have to wait for a few more days within the next week. But as I said at the beginning, I think that the trends that we had seen are still in play, and I don't think we should, we should try to fade market moves for the time being. The time will come, but I don't think it's now.
Your chart of the day with the yen is the key to everything, I think, Steve.
It is an important market. I do believe so. Yes, and
Yeah.
I'm paying very, very close attention to it because it seems it's still in an uptrend, but seems potentially vulnerable. And I think that this can be a very strong signal of things unraveling when we get it.
Okay. All right.
All right. Here comes that Canadian data, by the way.
I bought some Crown Royal.
Ooh. Unemployment's better than expected though, but the headline
Yeah,
number is weaker.
a little bit softer, but it's a positive number still.
Yeah, yeah, it is still a positive number, and unemployment rate's decent. So we'll probably, just yeah, we're gonna get some jostling around, and that's exactly what's happening right now. It's not a
Yeah.
huge
The
It only
participation rate
now it's
dropping a
roll.
bit might be it.
Yeah,
ooh,
I think we
okay.
could maybe we'll see 138, 137.
Full-time employment, it's come down. Part-time employment has decreased. So maybe there's a little bit more full-time employment coming in than the market expected. So yeah, I mean, we're seeing a little bit of a pullback here. This is a 1-minute chart, so don't get too terribly excited about it. But interesting moves. We'll see what happens. Remember, the retail market is short, so they're pretty damn short. So we'll see if they can they'll cover up some of it down here at these levels. We've only had a 10 pip reaction. There's been not much of a reaction here, guys.
Sometimes retail is right. Ask Roaring Kitty.
Oh yeah, I mean, no, retail can be right. It's just when everybody's on one side of the boat,
Yeah,
like so aggressively, that's when you start to
yeah. I know,
uh
I know. I
yeah,
know what you're
yeah.
saying.
Yeah. And let's not forget it's not just a Canadian story too. The dollar, I mean, you look at the euro's at the lows of the session. We in the European session, you can see we're
Yeah.
right at the lows here. And we're starting to break down. So if we break down in this euro, the dollar is going to firm across the board. So that's another thing. Anyway, I don't want to take up any more Mish's time. But I want to say thank you for all of you guys that were in the ForexAnalytix chat room. Giving you guys a big shout out on Jumbotron right here. Oh, that's nice, Amir. Very nice. Okay. So there's a lot of jokesters in our chat room too. And it was such an amazing event, and there was so much going on. So I want to thank you all for your participation there. And what a great week it's been with us as the trading community as a whole, and having you guys here on the Face Show. So thank you for that. Next week, just because Dale, you asked Ryan what's happening next week. We do actually have CPI next week, so don't think we're out of the woods. We have US CPI is going to be a big mover, CPI and PPI next week, and Pal's going to be speaking a couple of different times, I think. So there are some things happening, and it's going to be an exciting next couple of months. And so with that being said, Dale, I'll turn it back over to you.
All right, I want to thank you and Ryan for doing a great job again during F.A.C.E, and Stelios, who dropped in. He's on vacation. And Grega, did Grega come by? I don't remember.
He wasn't here today.
All right.
Yeah.
Anyway,
Yeah.
thanks, Stream Team. And welcome, Michelle.
Hi, Dale.
How are you? I'm going incognito today after this week. You're brave. You're
Well,
brave.
I get to put makeup on, and trust me,
Oh.
I love makeup.
So history made this week. I'm curious. Michelle's one of the best inter and intra-market analysts that I know. So I wanted your opinion of how the puzzle is fitting together. Why don't we start with the Modern Family? Everyone getting along?
I'm so glad you started with that, because I was thinking while I was listening to you guys, what is my foundation and what do I do best? And what is the simplest message that I can give to people who are tuned in today? And I definitely believe that it's the economic modern family right now. And it's so interesting. So I'd like to I would actually recommend that people write down some of these levels, because they're so important. And it's really going to dictate my next big trading moves. So we'll start with granny retail, because I think that regardless of everything that we've seen, obviously NVIDIA could never do any wrong, and growth stocks have been on a tear, with Tesla and
Yeah.
Amazon and Apple. To me, what's really going to define what happens next year, and even as we end this year, because obviously seasonalities are in the favor of the consumer typically, as we get closer to the holidays, we have to look at XRT. And people have said to me, what about consumer discretionary? What about this? I like XRT as grandma because it's that blend of staples and discretionary. And what's incredible is if you take a weekly chart and you go back 10 months, really since February, it has not had a close above 80, or it's had intraday spikes to 80, but it hasn't actually been able to close up there. So to me, without too much thought, if you just really believe in massive consolidation breakouts, then you have to, in my opinion, follow a weekly close over 80 in XRT. Could happen today. Now, would I be a buyer at the end of the day on a Friday? Probably not, after an election and Fed meeting and everything. But it would certainly be the first thing I would be looking at on Monday. So keep that in mind, that 80 level. If we
that
move
would reinforce a good holiday season. You know, there are a lot of people, more than half the country, that are very happy about the results. The business community, you know, we know that Trump is going to be more business friendly. There's not going to be any taxes on unrealized capital gains, which would have been kind of crazy. So maybe that's going to be the leadership. People are writing off the consumer again before the holidays, and I think people are going to spend till they drop.
Well, you make a great point because, yeah, ultimately, and this has happened throughout the history of the United States, when people go to vote, well, even though they may be upset about certain social liberties or other types of type agendas, ultimately people vote with their wallets. And that's what happened this week, is people believe that Trump can do better in terms of controlling inflation and bringing things back to the United States, lowering taxes and protecting the consumer. So that's exactly why it's so important to watch this XRT, because that's going to tell you whether or not the belief in Trump is real, and then for how long it lasts, because you'll have a nice launching pad off of that 79.80 level that has to maintain. So that's kind of really where my biggest eyes are. But let's move around the board quicker than this, because I want to get to other things. Obviously, people love to talk to me about commodities as well. But the small
we'll talk beans, Michelle.
We'll talk beans, yes. The small caps. You saw my article from last night. The small caps.
I saw the chart.
Right. IWM.
Yeah.
Another very important, grandpa, right? If retail is granny, then, and this again is going to be a great representation of how much the market believes that we'll be able to bring manufacturing and industrial production into the US. These companies produce in the US, and also how much interest rates are going to affect both areas, by the way, retail and small caps. So what's interesting is with the Fed cut yesterday, we're not really seeing it yet in the Russells. Of course, the day hasn't started yet. But this close would be a really good close if we close up here over this 230 level, which it looks like that's obvious, but we haven't gotten to those new all-time highs that we had in 2021. So you gotta still have to look out at like what, 243, 244. I'm really super interested in the biotech space. I haven't done a thing there yet, but I love the chart. It's been bouncing between 140 and 150 also for quite some time. And I think if we can get a weekly close over 149, 150, and forget about all the talk about anti-vax and all this other stuff, there's other areas in biotech that are important that are in IBB or XBI, depending on, I'm looking at IBB. So keep your eye there. If we go to semiconductors, again, you know, now a big political topic with China and exports and the CHIP Act, which now they're saying they're keeping. Who knows? But what I could tell you right now from the chart is 260 was a big number in SMH. We're through it. If we can get a weekly close above it, then my guess would be we'll see 280 in semiconductors pretty soon. Transportation's been interesting. That
They've
also
been lagging though. Michelle, what do you
they've
make
been
out of
lagging.
almost everything else has made new highs, and the semis led all last year. Okay, is there any kind of market tell, even though Nvidia has made new highs, that the semis are still well off their highs?
Well, I think that part of the reason has been obviously there's been a lot of, stuff coming out of China and problems there. And I think a lot of the companies are trying to transition. If you look at Intel, for example,
Yeah,
right now it's still very much a bottom play. A lot of people think it's the generational opportunity, and it may be. I still think it needs to get through 30. But that's kind of what's happened in a lot of the, super micro. I mean, there's
yeah,
been some real issues in that space with
right,
guidance going forward. And it
right.
got so elevated, this is the nature of cycles, right? That's why so many people are talking about the great rotation into some of these other areas out of growth a little bit. That would make sense. I don't think you have to necessarily overthink. You just have to understand that this is the nature of life, is cycles. And
Yes,
that's why I'm so keen on the first three I talked about, maybe a little less keen right now in the semiconductor space.
right.
Um,
Okay.
Transportation is another one, the old Dow theory, right? Here we
Yeah,
go. Transportation's done pretty good. So unless it really breaks back down under, let's say, IYT 70, I think that's another interesting area. Again, would support a Trump policy of goods in the United States. And then finally, we have to look at the regional banks. And that's been really fascinating to me because there's the classic example. As it got through 50, it's up at 65 or ish right now.
yeah. The final,
65
yeah.
is where it was in March, April of 2023.
SVB.
Yeah, right before it had the huge crash down.
Right,
So
right,
now what we've done is we've rallied back to where the crash started. So
right.
that's another interesting area to be looking at with the regional banks. So that's kind of how I'm looking at the family right now.
Okay. I know it's not in the family, but uh, I started paying attention to things like home builders, and Airbnb put out earnings yesterday. And I think that there's issues with the housing market. Uh, uh, I think that's something that has really propelled confidence and consumer spending and everything. And it's people's largest asset usually,
Mm-hmm.
and they have properties, rental properties. I think that it'd be ironic that a developer as president is going to reside over potentially the another housing crisis like we had in '08.
And yes, now I'm not necessarily worried about an '08 crisis because don't forget what happened in '08 was they were giving mortgages to just about
Yeah,
anyone, completely stated income, right? So you could say that you were, working as a house cleaner, but you
yeah,
were making $250,000 a year,
yeah.
and
Liar loans.
right, exactly.
Yeah,
And you had the whole subprime debacle, which really started it. We're not at that point right now. It's just a whole lot harder to get a loan right now with these levels of interest rates. And
great point.
and we have seen housing prices actually go way up over the last several years. So you have a kind of a, two-pronged strike against first-time home buyers, higher
Yeah,
prices, higher rates. So what could happen there is there's a lot of people on the sidelines are waiting for some kind of drop in the mortgage rates to possibly get in. So it may wind up correcting itself, looking at it optimistically, if we actually can see a reduction in the rates. And that's why there's so much conversation, I think, here between Trump and Powell. And will he keep Powell? Well, he can't just fire him without cause, but nonetheless, it's Trump, that can mean anything. And I keep reminding people that he appointed Powell. So he likes Powell. So I just want to divert here because I think what he said yesterday, people focused on so many other things, but only a couple of people focused on this. Somebody asked him about stagflation, because this
okay.
is going to be a nice segue for us getting into commodities. With stagflation, he said, well, the way we're going to prevent stagflation is not letting it happen. And I thought, wow, that's an interesting answer. So how do you not let that happen? Well, stagnation would mean that he would stimulate the economy so that let's go back to housing and the consumer. Rates
Yeah.
go down, stimulates buying of goods and also houses. That's one way. The other way is that he would try to control inflation. Well, right now he's pretty convinced that inflation is
Yeah, mission accomplished.
mission accomplished, right? So my guess, if I had to make a guess, is that he's going to be more dovish than not. And that would be, I think, a plus maybe for some of the surplus in housing and get some people out there to buy. People, I heard Blake say this before, and it's so true. Anybody who has an interest rate on their home under 3.5%
Yeah.
is not so keen to sell their house right
And
now.
pays 7 at
And pay
at a
7.
higher price. Yeah.
Right. The only way they would do that is if they could get so much money on their
They
house.
pay cash. Or something.
Exactly. So anyway, so that's kind of I'm not that worried about the housing. I wouldn't use the word crash. I think if we're going to have a crash, it's going to come from other places, but not necessarily from the housing market.
Okay. Valid. So one of the most under-owned groups in commodities, because they've been on the Bataan Death March since Ukraine, right? Since the invasion, is
Yeah.
grains. And the beans have been the week of the week. Wheat has held up better, corn has held up better. All of a sudden, in the last week or so, especially yesterday, got a great looking candle. And it's interesting to me is I don't think that this can be affected by tariffs.
No.
We're not going to, well, he's not going to put tariffs to hurt the farmers on China. And China has not been buying beans from us, but they came back in because they see the advantage. So that's something that having China being the buyer in beans is a pretty good sign that they're coming back to our market. And if we get a weaker dollar, that's going to even make it more attractive. And the yuan's looking like it wants to come back. So go ahead, tell us about food. And this is, like reliving the 70s and beans in the teens. We already have that one. So you have anything that rhymes with 20, Michelle? Even though
All
there's no one at the board to chant it anymore.
Well, I can't just
Okay.
talk about beans isolated without, first of all, mentioning in terms of China, cotton is another huge import into China from the
Yeah,
United States. We're big cotton producers here. So
right.
you gotta keep your eyes on the cotton chart. That also looks like it might be bottoming. If you just take a look
Okay.
at cotton, I'm not suggesting we trade it, but from information standpoint, I think the cotton chart is interesting to watch as a sign of how much China is going to be buying from us. But let's go back to beans. But before we talk about beans, let's also talk about
Sugar?
Yes. Oh my God.
All right.
You're in my mind, right?
All right. All right.
Well, the reason why we have to talk about sugar is because it's my trifecta, one of my trifectas. And my trifecta's been struggling this year, right? Because
Yeah.
silver gold ratio has flipped all over the place, although I still am very
Hasn't it?
yeah, and I'm
Yeah.
still much more at this point bullish in silver than I am in gold for a lot of
Yeah.
reasons, which I don't have time
Yeah.
to really get into. But we're
Yeah.
not really at a point that we can say, oh, inflationary. The dollar, which, we don't need to talk about because I think you exhausted the topic there before and you've said everything that I would have thought, but the dollar is still strong. That's another. And sugar as my third because it represents a lot of things. Geopolitics, weather,
Yeah.
tariffs, globalization, all of that, social unrest. I mean, it's like the perfect thing because it's in everything. It's a staple, and you cannot basically buy food off the shelf without sugar being in it. So
Right.
sugar right now, if you look at the chart, and it's in my daily yesterday, if you haven't seen it, that bullish pennant that's been forming on the sugar chart is a little bit frightening if it reconciles up. It broke out actually last week and then came back down. Okay, fine. But if it gets back through 2250, if you're looking at the March contract, that was the chart I think I posted yesterday. That's telling me about food in general. So that brings me back to beans. The reason why I was looking at the beans chart is because the beans have a lot of the same risk in terms of geopolitics and weather that sugar does, and also basically a staple, particularly as you're going out to Southeast Asia and China, right?
Yes. Tofu.
So yeah, tofu, right? And so the bean chart is very interesting. Here we have quadruple bottoms.
Yeah.
And if we can, yesterday it broke out over the 50-day moving average in the futures charts. And so if we start to see it move up, it hasn't quite taken out the resistance yet. And there will be resistance all along the way, but that doesn't matter to me. What matters is this giant base it's been forming over the last few months. And if it continues to go higher from here, like get through, really basically 106, 110, whatever, if you're looking at that contract, that to me means another sign. And in general, I believe that food is the thing that we have to keep our eyes on for next year. Not only as a potential investment, as I mentioned with sugar and beans, DBA could be something to be looked at as well because it covers a whole gamut.
And
But
it did it with the whole market selling off, okay? A strong dollar took metals down, but the beans actually on their own. I always look for days like that where you have a red day across similar groups. What's
Mhm.
green? There's a market message in that it
Right.
could be green.
I think it's off a little bit here this morning. I haven't looked in about a half an hour, but
Yeah.
nonetheless, that doesn't matter. I mean, by the way, my little very casual, unproven, but yet observation is never sell commodities on a Friday if they're weak. I don't know. For some reason, that just seems like on Friday there's profit taking, and it's a trap if you think the move is over. So just
Oh gosh, the floor trader never leaves you.
exactly. How
All
could it?
right.
It's been my friend. But anyway, so my advice to everybody is watch The Modern Family for the macro. That's going to really be a great guide. Again, considering the country thinks that Trump's going to fix the US economy to the point where it's going to see major growth without inflation. That is going to tell you in the charts. This is where the charts are super comforting. And then in terms of commodities, yeah, watch the silver. If it gets back through 32.50, I think that's a good sign. I don't even really necessarily care what gold does as much, more about silver and the relationship to gold. The dollar, I just looked at the euro dollar chart before I came on, by the way, and the euro looks terrible. But the dollar yen, is kind of like, oh, okay, if it breaks down under 149, that's probably weak for the dollar. If it gets through 156, not a great sign for the yen. What that does, I'm not really sure. The yen carry trade was something that people got all hysterical about a month ago. But still, regardless of all of that, keep your eye on food, basic food commodities, because even if we end the war in Ukraine or what have you, I still feel that that could be the secret inflationary sauce that nobody can control. Because as far as I know, we can't artificially produce food enough to feed the entire world, number
Yeah,
one.
Fed can't print corn.
Exactly. And the Fed can't raise interest rates enough to a point.
They
Uh,
did it though. They did it. I remember in 1980, the Fed Volcker was watching corn prices,
yeah,
and
but
he
look
kept
where he had to
tightening.
go. Yeah, do you
That's
think, but
what he had to do to break the corn market.
right. And do you think under Trump's watch that would
No,
happen right away? No, of
no,
course.
we'll be negative 5% interest rates. We'll go back to negative rates.
Yeah, well, maybe not, but at least maybe that 3.5% Fed funds rate, but that's really what I think is being targeted right now.
Yeah, yeah.
And I have to believe that Trump is reasonable enough and in communication with Powell, again, the guy he chose, to think that's probably more realistic and healthy as well.
Okay. What I want to do is I want people to be able to find you and the great work you do. And here it is. Here's Michelle's website, Market Gauge. You could find her on X at Market Minute, but she does a lot of great work. And Michelle is right. I get her free update. They, I was looking at beans, and then I got this thing for Michelle, and I read them, and there she is talking about beans. So when someone whose work I respect starts to talk about something that I was already, paying attention to, it's like a confirmation to me, Michelle.
I thank you, Dale, and I feel the same way about you. I love when we're on the same page.
Yeah,
Yeah,
yeah.
you and I think very similarly. Even if we don't always agree, that doesn't matter. What does matter is when we do agree. So if we're watching beans together, let's go beans.
Okay. I think that you're onto something, and there are ETFs. Have you ever tried any of the ETFs on the grains,
Well,
or they're a
SOYB.
problem?
Well,
Huh?
yeah, there were a problem with K1s. A lot of people can't trade them.
Oh, that's right.
Yeah, but
Yeah,
SOYB would be the one tied to soybeans.
yeah.
There's all these issues with it. I mean, but I know a lot of people don't want to trade futures. But DBA had an unbelievable move. I mean,
Okay,
about a year
DBA.
ago, people were talking to me about DBA. Oh, why do you think DBA is going up? At that point, it was only trading at like 20. It's gotten up over 26. It's sitting around 25. To me, that's not bearish.
Yeah,
That's laying in wait.
yeah. Any ag plays and stocks
Well,
that would?
yeah, I've been, that's why I'm so modern family conscious right now. Two things I really believe for next year. I still believe in the thin trade. I do
Oh yeah,
believe that the diet drugs, love them or hate them, doesn't matter. I think people would say, I'd rather be thin than, and have any kind of risks from the drugs than be fat, which we know the risks are. And then that would create a situation where people might be looking at certain stocks that will make them better in their appearance now for the first time as they feel better about themselves. So that would be, skincare and beauty,
yeah.
maybe fashion, maybe athletic wear, sneakers. These are the kinds of things for 2025 that I've been sort of looking at.
Okay.
Um, I still think, with the Tesla move, I think that the whole solar energy space and some of the American-made EV companies are so undervalued. I wouldn't necessarily be buying the Chinese EV companies, even though, China's going to do its own thing. But if we're looking at American economy, yeah, look at that. Look at some of some of the anything that has to do with industrial production increase. Symbotic is a company that's starting to look very interesting. They do automation for warehousing. Walmart uses them. So
Okay.
start thinking reshoring, but also think inflation, think about the basic raw materials that are needed to produce all these things that people are saying are going to be produced in the
Yeah, a
next.
lot of them are in China, so we have to be careful about poking them in the eye too
Yeah,
much, because
yeah,
I know we're reshoring, but all the production is still there.
absolutely. And Vietnam, which,
Yeah.
right now has probably been one of my, well, there's two trades that have been my most frustrating. Believe it or not, one of my better trades besides Bitcoin, blockchain, and all of that, because that was, regardless of whether Trump was winning, with the halving, it was almost right on schedule. Every time we've had a halving every 4 years, it's October when Bitcoin
Yeah,
starts to take off. And that's
yeah,
exactly what happened. And then, of course, the election, everybody said, oh, yeah, it's
yeah.
because of Trump. But I think it was going to happen regardless of who
Yeah, it was
won.
a cup and handle or a bull flag or
Exactly.
whatever. Yeah.
Yeah. So,
Any view on Apple before we say goodbye with the China thing coming up again?
you know, I have not touched Apple for a really long time. I
Yeah,
mean, it's
it's not
really,
attractive.
I know
It's a
people love.
bond. Is it
It's a
like a bond?
bond. Yeah, if you bought Apple and just sat with it for the rest of your life, that's one thing. But if you were looking to invest, that's probably to me not where I would go right now. Like I said,
Okay,
really keep your eye on that retail space, that granny
okay,
retail
good.
10-month consolidation. You want to make some money, or at least I'm
Yeah,
hoping if you want to make some money, that is going to be the place that shows if the optimism that everybody came to on November 5th for a Trump
yeah.
presidency is going to be real or not. That and the interest rates, of course. That will tell you everything right there.
Another great interview with great content from Michelle Schneider
Thank
at
you so much.
Market Minute, and you guys can watch it again. Always check on what Michelle is thinking. keep an open mind. It'll keep your account open. Right? Don't you think?
Oh yeah, yeah.
You know,
TGIF too. Man, I am tired.
yeah.
I'm sure you're tired too. Well, you didn't
All
show you.
right. Yeah, that's how tired. See how I look? That's pretty tired. I'm just a black box right now. So anyway, Michelle, great being able to talk to you again, and have a great fourth quarter, you and your team and all your subscribers. I hope they, just uh, reap all the gelt by Hanukkah. All right.
Thank you. And by the way, I just want to say thank you to Stelios and Blake too, because you guys post my stuff every day, and I really
Yeah.
appreciate
Yeah. They helped me recover my Twitter account.
that.
I
Ah,
lost it. These people have hearts.
oh yeah, no, they're
Yeah,
wonderful guys,
they
both
do.
of them. Yeah.
Yeah.
Okay. And so are
So,
you, Dale. So thank you.
oh, thanks, Michelle. Nice talking to you. Michelle Schneider, everybody. People are thanking you. Saloom says great interview. So you have fans here. Thank you,
Good job,
Michelle.
guys. Good luck.
All right. All right. Bye-bye.
Bye.
So that's a wrap, everyone. I'm exhausted, like Michelle said. Have a great weekend, recharge, and we'll do it again next week. And don't just count your pips, count your blessings. Adios, everyone. See ya. Thanks again, Michelle.